And Steve Forbes joins us this morning. Great to have you, Steve, on the show to talk about this. If the trade war continues, how long do you think before consumers feel prices start to rise significantly?
Well, you're going to see it in the next 60 to 90 days. The big thing right now is with China, with those 145, 245, pick a number of tariffs that are out there. I don't think you're seeing a lot of inventory and buying from that. They're all waiting to see if those rates can be reduced. But in terms of the tariffs that have already been in there and the uncertainty that it's created, there has been people buying in advance. And so if we don't get this thing resolved in the next 90 days, you're going to see prices having to go up because people aren't going to stop trading, and they're going to have to buy certain things. And so how the president's supposed to get massive trade deals done in the next 90 days, we'll see. I think you're going to see a lot of cases where there'll be some deals, they'll highlight it and give extensions to the others. But the uncertainty is a killer, and people are holding back. So I don't know what effect that'll have overall on prices, but it will lead to a slow economy, perhaps a recessionary economy, unnecessarily.
Well, how about this one, Steve? The Wall Street Journal reporting that President Trump wants to, quote, upend the Federal Reserve. Do you think it would be wise for Trump to exert more power over the Federal Reserve? What are your thoughts?
Well, we haven't had a Federal Reserve president fired by a president since the early 1950s. And but it can be done if the president wants to have it done. Eventually, he can force the man out, Powell out. But the thing is, what do you do with the Fed when you get it? And unfortunately, the Federal Reserve does not know much about inflation. It thinks prosperity causes inflation. The whole way the Fed is modeled, the way they do monetary policy is wrong. So what are you going to do with the Fed? Lowering interest rates isn't going to cure what tariffs are doing and the uncertainty it's creating, the prices that it's raising with the economy. The Fed can determine the value of the dollar and focus on that, but there's nothing they can do about the rest of the inflation that is being introduced now.
Well, the value of the dollar is absolutely plummeting. I mean, how much of a concern is that?
It's hugely concerning, especially the price of gold tipping over $3,400 an ounce. That means the dollar is weakening, and that always leads to future inflation. Since 2023, the gold's gone from $1,800 to $3,400 an ounce. That's a sure sign we're going to have a weak dollar ahead, which means ultimately turbulence and higher prices in the marketplace. Just look at the 1970s, and we can see where that leads unless something is done about it now. But I don't see any sign that the authorities have any idea constructively of what to do, sadly.
We have been warned. Steve Forbes, great to speak to you, sir, as always. Thank you very much.